Welcome back to Golden Rule Radio, your precious metals update. Let's talk about gold.
Down and down and down she goes. Where she stops, nobody knows, except for Miles. What do you call 4 miles?
I just know where she could stop. We did blow through that 1296 resistance level. We bounced there for a couple days, though, so we definitely saw a little bit of support that we were hoping for. Your next two potential stopping points are the short-term fib at 1263. Of course, all of our preference would be we finally go back to and actually made a, fourth touch now at about 1200 to 1212, which would be your long-term 618 fib going all the way back to 2016 when we finally hit that bottom.
So what you're saying is we've pushed into the 1300s. We've pulled back into the 1200s. We're now at about 1285 today on Wednesday when we're recording. And we have a few levels here, 1260-ish, 1212-ish. And we're looking at this being probably the last pullback that you're going to get, the last opportunity you're going to get in the 1200s before you push into the 1400s. As we stair-step back up, I think I threw out the number a couple weeks ago, 1430. That's what it looks like where we're headed.
I love it. I love this pullback, and we don't want to sit here on this show and be perma bulls and tell you that it's always going up. Listen closely each week. Last week we were trying to figure out what the Fed was going to do. We recorded right before the announcement. Didn't expect a whole lot of action either way, and we didn't get a whole lot of action other than to Miles' point. We did come down to that support at a little at 1300, mostly at the 1295, 1296 area. And for us to be coming down below that, to me, is very, very healthy. And it's strictly off of the news that Janet Yellen is thinking about tightening further and raising rates before the end of the year and trimming the balance sheet, in October of the Federal Reserve. So those are all things that are strong dollar.
Well, and don't paint me into the corner of not being a perma bull. I'm going to continue to be a perma bull as long as we're going to continue to talk about things like Janet Yellen and Donald Trump and
fundamentals.
Yeah, exactly. So I'm definitely going to remain a perma bull in the gold market as long as I'm a perma bear in the US dollar market.
Speaking of perma, we're perma bulls on gold because we think that you should accumulate gold, and it has everything to do with the dollar and debt. And so much debt is being accumulated and built up that the next crash is going to be uglier than the last one. Tori mentions pulling back and that he likes this pullback into the 1200s. And the reason for that is because those are your entry points. This is when you should be accumulating, buying, starting new positions. This is your opportunity.
And that should be true of any asset class. You should be buying Ford Motor Company at 50 cents a share. You should be buying bonds when they're at substantially high interest rates. And you should absolutely be buying gold when they have no intention of actually raising interest rates, no intention of actually correcting our economy, correcting our fiscal status as a country, and no intention of keeping the gold prices down in the long run.
Gold will be the last man standing, as it's always been said. And when all this comes to fruition, when the debt actually matters, everything will come back to gold.
It will. And so again, opportunity to step in. All right, so moving on to silver. Where are we sitting today, guys, and how is this related to the gold price movement?
Well, we did drop below that top trend line we've been following here for the last couple weeks. However, we do have quite a ways to go before we'd hit anything that resembles a fib down in the mid-15s from the last time we hit the bottom trend line. So there's a number of spots we could see a stopping point on silver in the mid-16s based on previous price action. I still think silver is starting to show bullish tendencies, even though the other metals already have. We talked about that a few weeks ago as well. And I still think silver is the sleeping giant, and it's probably the thing I'm getting the most phone calls about right now.
It looks evident that silver and gold are on this little downward channel, and it looks like it could go a little lower. Take advantage of those opportunities. Silver's going to get cheaper here, it looks like. So here's your point to enter.
Yeah, a nice little dollar rally. We're up, to 93.4. And so your purchasing power, you're ending up with more ounces for the dollar. And to Robert's point, why wouldn't you be adding here? Even if you do think it's going to come down to that 1260 level, 1263, you may be asleep during that time. So don't try to wait for an absolute low and try to pick it. We can't do that.
I think people get a little bit of paralysis when you talk about an entry point. And I want to kind of blur the line of an entry point because you don't really just want to pick a point and think that you're buying the bottom. You're probably not. Most likely you're not going to buy the bottom. You're not going to sell the top. So trying to pick a point and enter, you're in a range, you're in an asset class that needs to be accumulated because of your other options that are not good. I don't want to be in the stock market. I don't want to be in the bond market. I don't want to be in the currency market per se. It depends on which one in a short term, but the dollar long term is going lower. Kind of whittling down all of these different asset classes, and you come to gold and silver, and it's a quality asset. You want to be accumulating it, not just trying to pick a point and enter. You're going to immobilize yourself trying to pick that exact point where to enter.
So Robert, you just mentioned currencies. I mean, does that go for the blockchain, cryptocurrencies? We've had a lot of questions on that in the last couple of months. I know that there's a lot of excitement around it just from a speculation standpoint, but anything to say on the cryptocurrencies?
So if you're buying the actual asset, or in this case in cryptocurrencies, you're buying the product or the technology and you believe in it, yes, follow that technology. Maybe speculate with a little bit into some of these projects and the ICOs that are coming about, but I'm not sure that you necessarily want to bet your whole farm on it.
No,
obviously not.
I don't think you want to confuse it with the physical or tangible commodity mandate.
I think there's a ton of overlap between the mindset of someone buying gold, silver, platinum, and the mindset of someone looking at the cryptocurrencies.
I totally agree.
I think there's speculation there, obviously, for cryptos as well as in gold.
Foundationally, they were even founded on the same mindset. So
yeah. But the reasons that I buy gold and silver is not for speculation. Physical gold and silver is not my speculative money. Now, I do have speculative money that I will invest, and I'll speculate on cryptos. I'll speculate on mining shares. I'll speculate on whatever the next widget is. But the certain mandate that you apply to owning gold is primarily for insurance. Honestly, I think that's why this company has actually survived for 45 years when for 15 or 20 of it, gold wasn't going up. It was kind of flat to up and down and flat. So owning gold and silver is a mandate for insurance, number one. It's a mandate for independence. You're not dependent on a computer to turn on or a bank.
But just don't look at it as your safe haven. That's your gold and your silver. Don't look at the cryptocurrency as your safe haven.
Absolutely.
We don't know how governments are going to react to it. Look at China recently. It's a testing ground right now, and if it becomes a major threat, I can see governments coming against it. All we're saying is there's great speculative opportunity in the cryptocurrencies right now. Take advantage of that if you do your homework. Be smart about it, but have an exit strategy as well. Treat it like an investment.
Yeah, you bring up a great point about governments, how they may look at it, they may change the regulation on something, how they may get involved in it.
Well, and Chief Executive Jamie Dimon with JPMorgan Chase just came out with a quote, but the bigger they get, the more governments are going to close them down. And we've said this a couple times over the last few months. My biggest fear about blockchain technology has nothing to do with how it acts today, but what does it become? If we could go back to 2001 and say, hey, what's the right social media company to invest in right now? You'd have said MySpace. MySpace doesn't exist anymore. So you don't know what a new technology like this 3, 4, 5 years into its infancy is going to end up creating over the long run. Bitcoin probably won't even exist 10 years from now, but something will have grown out of that, and maybe it'll be private. Maybe it'll be publicly traded. Maybe it'll be something that we all have free, unadulterated access to. Or maybe it'll be co-opted by the governments, and they're now controlling the mechanism again, as they have been, to how we exchange goods and services.
But you've read history books before. What do big, powerful entities do when things get out of their hands?
Yeah, I'm trying to remain hopeful, but the reality is they will eventually, as Jamie Dimon says, probably step in, co-opt this technology if they didn't create it to begin with. Earlier this week, we did have a little $15, $20 jump up in the gold price, even though we've been expecting it to trail back down. What caused that?
Well, I'll tell you why, Miles, because between Trump's tweets and his UN speech, North Korea now has determined that his words have been a declaration of war, right? So in that instance, they're certainly going to respond with increased rhetoric and even a little bit of gamemanship.
Well, and I guess declaring on Twitter is technically declaring in writing, although that obviously is a first for the world. War declared on Twitter. There is a little bit of rocks being thrown around by North Korea. Last night, obviously, we saw that they are moving some military vehicles and personnel, jets and the like. So maybe it's gamemanship, maybe there's some legitimacy to this. I just don't see a world where North Korea poses a long-term legitimate threat to the United States. But obviously, nowadays, with the technology we have, the idea of conventional warfare doesn't even exist anymore.
Right. And we know that from a ego or a principle standpoint, he will respond strongly. He said last night there would be devastating effects. And I think that Trump will be devastating in any sort of military response. He's devastating in any verbal response on Twitter or anything else. So I do believe that it would be devastating, but I think that we have to see that North Korea has become a legitimate threat, not different than they were, not the same that they were 15 years ago, and that we shouldn't be getting sucked into some new back and forth on the verbal tennis court. I just think that if it happens, it will be devastating.
And gold will definitely react to actual devastating events a lot faster than it did this past week just on a couple tweets.
I'm going to cut it off there, guys. Have a good week.
Thanks again for listening. And if you like the show, please hit the subscribe button below. And you can also call us at 1-800-525-9556. From a Twitter standpoint, you can follow us at ICA Gold.
Thanks for listening.
Have a good week.